Welcome to Premium Cashflow Real Estate Investing Podcast with SK038. During this program, you will hear guest experts sharing their experiences, best practices, and market insights. We discuss investing in multifamily apartment complexes and how a busy professional can passively invest hassle-free in various opportunities. Your host, SK038, owns millions of dollars of assets and has done thousands of value-add projects over 20 years now. So listen in for insights. Here's your host, SK038.
Welcome to another edition of Premium Cashflow Podcast. Today I have the pleasure of hosting Jens Nielsen. Jens is with Open Doors Capital. He originally immigrated from Denmark and has a successful IT career, and he has been investing for several years now. He currently owns 74 units in New Mexico and Colorado, and is a general partner in 750 syndicated units all around the country. Over the last few years, Jens has also passively invested in 14 different syndications spanning over 800 apartment units, 2,000 mobile home parks, and over 6,000 storage units. And he does some private mortgage note funds as well, and some private money lending. So Jens is also a coach and also mentors several students. So Jens has an all-round background, and today we are going to dig into his very interesting story. And welcome to the show, Jens. I'm excited to have you today.
Thanks, Akar. I really appreciate the opportunity to talk to you today.
Awesome. There are a lot of parallels, Jens. Just like you, I am an immigrant as well with decent success in real estate, and I appreciate you taking time today. For our listeners, Jens, help us give us some background as to how you got started and how the immense success for you came along recently.
Yeah, so like a lot of people, I was taught the story bought into the story of getting an education, getting a job, and saving into your 401k, right? And
sure. Mm-hmm.
I kind of continued down that path for many years, and then one day I realized, well, that's all good. If I ever want to retire, I need to do something different. And that's when I discovered real estate, and I thought, hey, real estate is really the vehicle to get that passive income to live, a life on my own terms versus my employer's term, right? And, as soon as I made that discovery, I started studying everything I could find, books and podcasts like your own, and, starting to go into events and really just learning what it took to be a real estate investor, and then quickly took some action too. Within 6 months, we had bought like 19 units, a couple of fourplexes and an 11 unit, and I just quickly took action and then learned along the way through mistakes and other things. So that was kind of the path I took.
Awesome. So Jens, for new listeners there, help them maybe give a few nuggets as to knowing what you know now. What are the few things like new investors should look at in terms of getting started or getting knowledge and things like that?
Yeah, I think it's a combination, right? You definitely want to educate yourself a little bit, go onto various websites and research, so you kind of know the financials, you understand how to evaluate a property, and you kind of know a little bit and make sure you understand the market. I also think you need to take action, like just go out there and do something, because you can't study forever and never take any action because you don't get anywhere.
Sure.
Really go out there, maybe find a mentor, somebody who's been there before that can give you some advice, give you some help along the way. And that's one of the things I did early on. I reached out to a friend who lives here in town, and I said, hey, I know you've been investing in real estate. How does that work, right? And he's like, sat down and we had dinner, and he had like a napkin out. Pretty much, he's like, well, you look at the property, you look at what it costs, you look at the income, you look at the expenses, and then you see if there's any money left over, and you know if it's a deal or not.
Right.
And
awesome.
So that's like, oh yeah, that makes a lot of sense, right? So I connected with him, and he then said, well, if you want to invest in this market, and my first market was Albuquerque, New Mexico, because that's the closest bigger city where I live.
Sure.
He said, if you want to invest there, connect with this gentleman. He's been doing it for 50 years. He really knows what he's doing. Connect with him. He loves to help with new investors. And that's how I get started. I basically reached out to his broker. He found me my first deal. So that was kind of how I started. I think for a new investor is, reach out to people who've done it before. Make sure, if you starting with a small property, reach out to people that are doing small property. If you want to try to do something bigger, then reach out to those types of people. So I think that's super important.
Awesome.
So those are some of the initial things. Yeah, for sure.
I see. And multifamily in general is very unique, Jens, where you have to be very methodical, in my opinion, and very thoughtful as to how you take action and how you go about, evaluating different deals and things like that. Could you help our listeners understand how you evaluate different markets and what things you look for in some of the assets that you are looking at?
Yes, I think, everybody says location, location, location. I think I did learn that lesson early on that even, you really got to be careful about the neighborhood, right? So I didn't really initially I didn't spend much of time that, well, I'm just going to go to this city because I can get started there. Later on, I learned, well, the city may be okay, but the neighborhood is hugely important, right? So I learned a big lesson there early on about investing in the right neighborhood. Then, going forward, markets, and really, I kind of look at two different things here. I either want a market that has, some good economic drivers for a lot of appreciation. So we invested in Phoenix last fall because, Phoenix has been growing very rapidly and a lot of people moving there, good rent growth. So I felt like, hey, there's some strong drivers there. But then also I do like cash flow. So we've also done some stuff like, the upper Midwest, where maybe the appreciation is a little bit slower, but it's steady. It's very strong cash flow because the properties are not that expensive, but they're still in order rent. The rents are good based upon the property price. So I kind of look at both, right, to see and mix up my portfolio a little bit.
Awesome. And tell us about your first deal or a first larger deal, how it came about, how you found it and how you financed it and things like that, Jens.
Yeah, I think the first larger deal that we partnered on was 38 units. It was in Albuquerque, New Mexico. And I had actually, I had grown and I was like, okay, I want to do something bigger. I didn't have quite the capital. So I asked my broker / property manager, I said, hey, if I find a deal, he's also an investor. If I find a deal, would you like to invest with me? He said, yeah, sure. Just let's do it. And I found it on LoopNet. It was 38 units. It was listed too high. And I remember it was listed at $1.5 million, which may seem like a low price, but that was what it was. But it was pretty worn out, pretty run down, and needed a lot of work. So what we decided is, let's go in there. We ended up getting it for $1.2 million, and we put five partners together. Brought, we got half of the loan from the banks for $600,000. We brought $600,000 to the deal to buy it, so 50% leverage. But then the bank gave us a construction loan for another $550,000 to do all the rehab, right?
Sure.
So there was an interesting model, right? We actually had this interest only for 2 years while we were doing all the work. And it's been 2 years. We actually just hit the 2-year mark here this month. So that was my first larger deal. Learned a lot about taking older properties and rehabbing them and all the challenges you're going to run into. Right?
Sure. So was that a traditional bank financing, Jens? Because typically, like Fannie Mae, Freddie Mac typically wouldn't finance, like really low occupancy deals and things like that. What was sort of your financing structure around it?
Yeah, it was recourse bank financing through a good relationship we had with the lender there. So yeah.
I see.
Any partner had to sign on the loan, but
sure.
Okay.
Yeah, I mean, if the deal works, numbers work, there's good cash flow, good upside. There's no reason to, even for smaller deals, you can certainly have a, the recourse bank debt, as you're saying. So speaking of the value adds, right, Jens, like what is your take on, doing the value adds? Like, are you big into like doing lots of renovations into your deals, or you look for assets that are already looking well, you're just trying to optimize whether the operations or some minor rehabs? What is sort of your investment strategy around the value add?
Yeah, so this deal we just did was a heavy value add, and there's a lot of risk around that in terms of your unknowns, like the plumbing that we need to redo because it had all kinds of problems, right? So there's that risk. I think you can generate a lot of value by doing that because we got the $30K a door, and then we can really increase the value. But now going forward, if I'm doing larger deals, I don't like that really heavy value add. Because if we're getting, if we're syndicating a deal, the returns are a little bit too unpredictable because, if it's $10,000 a door, maybe it moves to 12, and then suddenly your returns are going to be kind of messed up, right? So I will do a heavy value add in a smaller deal. I wouldn't do it in a large one like a lighter, that $5,000 a door type thing. So that's kind of my approach right now, because I think that's a little bit safer for larger deals too.
Right. I think that's a good point, Ian, that for larger or deep value add deals, I think you raise a very interesting topic where I think if your asset or the number of units are very high, I think the amount of risk you are bearing over time is significantly higher. So I think I concur with your assessment there, is that I think as long as it's manageable, mid-size, maybe, I don't know, 80 to 100 doors, it's easy to take on. And plus experience plays a part as well, that I think the experienced your team is, and, more of the experienced partners you have, maybe it's a far more easier to, launch into like larger deep value projects. Would you agree, I guess?
No, I think so. I mean, there is that risk of the unknowns, right? And if you start overrunning that, if you do it on 10 units, no such a big deal. If you do it on 100 units or 200 units, that's a tremendous amount of extra cost there. And definitely your team, right? Who are you bringing in there? Who's doing the value add? Is it your team? Do you have to have your property manager doing? Is it other contractors? And really making sure that their bids and their track record is solid. I had an experience with somebody I know who based the purchase on one contractor's bids for the rehab, and it turned out that they were way too low. So then they're like, man, now we can't go in there and actually fully execute that value add strategy, and that's going to have some impact on their return. So it's risky, and that's why I'm like, let's do lighter value add, because I think the returns are a little bit more steady that way,
right? Right. So now, Jens, you have the perspective from both sides of the coin, meaning you have invested passively, and you have, you're obviously a sponsor on the general partnership doing various deals as well. Could you help us understand, Jens, that what was your appeal for investing into passive? Like, what was it about the multifamily asset class, or let's say self-storages and things like that you have invested in? What was the appealing part to you that you said, hey, I want to go in full on passively, I am fully committed into this asset class? Could you help us understand what was your mindset around it?
I have been around long enough to see various stock market crashes, right? And
sure.
That was one thing. I was like, man, just see the stock market going up and down. I have no idea why, and I have no control over it. Right. So I felt like if I pull some of my money out, this is mostly through retirement funds. So if I pull some of my capital out of my retirement fund, put that into real estate, first of all, I understand real estate, and I can analyze the deal and say if it made sense, right? If that syndicator was actually doing a proper job of analyzing it. So that was one thing. And I felt like I wanted to learn how a larger deal was being run. How's the syndication run? How's a fund being run, while I was still trying to learn it. So that was another opportunity, So, and So far, I like it because it's, steady income, and I know one day the property will sell and there'll be some good appreciation coming my way. So far, it's been, I'm still very committed to that path.
Sure, sure. And then, Jens, what were some of the concrete steps you took? You went from a passive investor to learning and then, syndicating your own projects. What were some of the things you did that increased your confidence, your deal flow, and, then you were able to like sort of syndicate your own deals, bringing on, more and more passive investors into your own deals. Could you maybe help us with some of that aspects?
Yeah, the confidence is really partnering with people. So I started learning more about what a syndication was, and then I would go to events, to various educational events and conferences, and I started connecting with people and trying to find a way to add value to an existing team, right? Because going out there and doing it by yourself is a little hard, but I felt like I could find some teams that were already out there doing it. I could add some value through doing underwriting, due diligence, bring some capital to the deal, and that way getting a part, kind of my foot in the door, if you will,
Sure.
and helping those guys, right?
Right.
And then as I've grown, I've learned more about, okay, where's my unique strengths? Where can I add more value to a team? And
Sure.
then kind of growing that, right? So this last deal that we are kind of closing here shortly, there's, I have a bigger part of that, and I'm sort of kind of growing into becoming a bigger member of the general partnership. So that's kind of the path. But I think, it's hard for a new investor to go out there and syndicate his own deal. They definitely need to get those key principles to partner with, and then find that right group to work with. That's been my experience.
Sure, sure, sure. And there is so much to sort of unpack there, Jens, what you said about, getting your foot in the door, helping the larger team, knowing, what your strengths are. And once you find your key strengths, you focus on them and you specialize in that. And then, you sort of, go into it and, of course, increase your own confidence, and hence you start to take on bigger deals. Of course, your share in the partnership increases as well, right? Help us unpack some of those aspects, Jens, as to when you started, like what was your deal structure? Then as you went along, what are your key strengths that you now focus upon, and you kind of bring those strengths to the general partnership?
Yeah, so I mean, initially there was, small ownership of the general partnership through those, you know, uh, underwriting, due diligence, capital, and stuff like that, right? But then I've learned, from my IT background, that I'm good at systems, I'm good at being systematic, I can help with a lot of that stuff. So I brought some to, some of my later deals where they were very manual. So there's a lot of maybe redundant tasks, or tasks that weren't very streamlined. So I've then since gone in there and help us say, well, here are some tools we can use. We can set up an investor portal so people can go and sign in there and do their investment there, sign all the paperwork electronically. Here are some we can use other tools to really streamline the process and making sure we go through all the steps along the way, right? So really helping with systems and stuff that I can do remotely, because I'm not very often
physically,
right? Yeah, I'm not physically there.
Sure,
right? So,
sure.
so that's
And most of most of the partnerships are that way. I mean, honestly, I mean, we are investing in growth states, so it's physically not possible all the time. So you are, definitely maintaining, different tools and things like that, relying on technology as much as you can. And, of course, you're going, visiting the assets for due diligence and time to time asset management and things like that, right?
Yeah.
So, yes, moving on, as new investors get started, what would you sort of advise them in terms of should they invest in heavy value add assets, or should they look into light value add assets? Give us some of your perspective on those topics.
Yeah, you think we touched on that a little bit before. I think if you're a new investor, start with the lighter value add deal, unless you have a very, very strong partner who knows how to do that heavy rehab, or if you have a construction background or something
Sure.
like that. Yeah, if you're buying, a 5, 10, 20 units by yourself and you have the capital to fix it up, yeah, you certainly could do that. But if you're buying a larger deal, I definitely would not recommend the heavy value add, the light value add, because I think, again, the risk is a lot smaller with those lighter value add deals.
I see. Good. Thank you. And also, Ian, as you know, with all the COVID pandemic that has come around, the lot of tenants are impacted. The blue collar workers, lot of hours have been reduced. Some people are late on rents. Some are absolutely unable to pay, and things like that. And what that has turned into is the collections are pretty much impacted nowadays in terms of how one is collecting from month to month and things like that. And where I'm going with this, Jens, is that when we evaluate the deals, let's say in next coming 6 months or a year and things like that, and we are looking at these gyrations of NOI, what are some things you can advise our fellow listeners that they can focus on to kind of whether better understand the impact of COVID that would have happened on those assets, or also, understanding those variances that, hey, NOI was choppy. Give us some guidance on some of those issues.
Yeah, it's interesting because we're in the middle of a deal that we got under contract in late February, and then we were hoping to close it in, April or something. And then all this stuff happened, right? So
Sure.
What we did, we went back and we was like, okay, well, we had a value add strategy there. It's like, okay, well, we probably cannot go and raise rent in the first year. So we said, okay, if we just keep rents flat, what if we look at what are the what's our break even point? Can we survive at 20 or 25% delinquency or occupancy or economic occupancy? And we just looked at all those things and made sure we still had a solid deal there, right?
Sure.
So that was one thing. I think you need to be very careful about assuming rent growth in the next 6 months to a year, because if people are struggling, you don't want to go out and hit them with a rent increase as well. That's going to really be a challenge. And then if you're evaluating a deal in 6 months that has been very choppy, you may have just to go on, a thing stabilizing. Is the last month looking better, and can you analyze that out? Or is it just up and down, and you just have to decide, what value can you give on that property? And that's going to be challenging because I have not seen a lot of delinquencies yet in my portfolio, those deals we were in. But is that going to change in, June, July, August? I don't know, right? So
Sure.
I think some of the pain is still to come for sure, right?
Right.
Don't rush into a deal right now, I guess would be my advice.
Right, absolutely. I think new area, some new assets we don't know, especially we don't know what the tenant impacts are. So you're absolutely correct. I think rushing into something new and perhaps owning it in next 60 days, and then you still have the impact coming through, and that would be very, very challenging. So in terms of your deals, Jens, like how you went about structuring them in terms of the limited partners, general partners. Give us some insights into how the deals are structured.
So we have a joint venture deal, right? That's just a straight split.
Sure.
Based upon the amount of money everybody brought to it. We gave a little bit more to the PM because he's there daily working on it, but
sure.
The rest is just a split. Under syndications, we've gone both ways. We've gone, with a preferred return, 7 or 8% preferred return, then with a 25-75 split, which I think is quite common.
Sure.
We've also done some deals where it's just been more of a straight, 70-30 split or 75-25 split with no preferred return. And the way we kind of explain that is, well, we're not taking any fees, right? We're taking a small acquisition fee, but we're not taking any asset management fee, no capital distribution transaction fee or anything like that. So we're just kind of splitting it. So we're not feeing anybody to death, right? and we're just paying out, whatever the income is. And that's been a model that it's maybe easier for some investors to understand. At the end of the day, more sophisticated investors probably want to see that preferred return. But, if this is one of your first deals, you may be happy with just a straight split. So we just always look at what makes sense, right? Because everybody needs to be compensated fairly. And I don't want to take, hundreds of thousands of dollars in upfront fees and then not be able to return my investors a decent amount of money, right? So that's kind of how we look at it.
Sure. So it is all capital preservation and proper returns given to investors. And within that framework, it's fair to say that if you can give a preferred return, that is the most preferred route. And I guess hence the name, I should say, right? And if it doesn't make sense, then that's where I think you were alluding to, that maybe we unroll our, let's say the acquisition fees or the asset management fees, so that you can still, entice the investors and keep their returns, attractive. So it's fair to say that you want to align your interests based on, what's best for your passive investors, and then, structure the deal accordingly. Would that be correct, Jens?
Yeah, and I also think, one of the challenges I'm seeing from the syndication model is that if I'm putting a deal together, how am I going to make money? I'll make money in the acquisition fee, and then the asset management fee, and then when this property is sold. Sure. But typically, there's very little cash flow along the way for the general partners. So what happens is, general partners they want to sell as quickly as possible so they can get their payday, right?
Sure.
Which ends up being a little bit of that, well, now we just sold this property. What are we going to do with the money? We have to find something else. Some of these deals we've done in slower growing markets, it could be 10 years before we sell that property. But we want to make sure the general partners are compensated along the way through some cash flow. So that way we're like, well, let's not take a bunch of money up front. Let's take, a little bit of a cash flow or some of the cash flow along the way. No acquisition, no asset management fees. I think there can be different ways. What is your long-term strategy with that property? So I feel like that has worked for us too in that model.
Interesting. Thank you for that detail, Jens. And just the last few questions, Jens. What is the best advice you have received as you started your career and you progressed, and now you are a general partner into multifamily? It is a complex web for a new investor to understand. Could you help us, maybe tell us, like, what was your best advice and how it kind of steered you in the right direction over the years?
I think the advice I got from my earlier mentor was, be careful about assuming you can raise the rent as much as everybody tells you can do, right? Everybody said, oh, I can raise $100 or $200. And you may be able to, but what does that take? So, he's very conservative. He said, let's not raise rents too quickly, because as soon as somebody leaves, you have that vacancy and all that rehab to do, sure. Right? So, so I think the best advice is, like, be conservative about your rent growth and keep your tenants happy. I think that's really an important learning experience.
That's awesome. And since you are a mentor and a coach yourself now, Jens, help our listeners understand that what are the key things that you see in people. Perhaps they limit themselves or flat out fail. Give us some tidbits for our listeners who may be listening to and trying to understand that, hey, from a coach's vantage point, what are the few things that you're looking in students to help them succeed better?
Yeah, I think it's basically seeing that your amazing life on the other side of your fear and your limiting beliefs, right? So we don't really know how to get there. So we just see, well, I'm never going to get started. A coach can help you see, okay, in 2, 3, 5 years, this is where you want to be. Let's break that down into what you should do this week, next month, right? So really helping you seeing the path forward, because I think a lot of people are having a problem envisioning where they can go to because they've never been there before, right? And
I
then
see.
there's like, so they look at somebody, they feel like a successful, and they're like, oh my God, I can never do that. Well, that person also started somewhere and went through the path, right? So really helping them see that progression and that growth is something that I really focus a lot on.
Awesome. Beautiful. Thank you. Thank you for that detailed breakdown. And also, Jens, what are some of the few things daily that you do that, propel you or keep you grounded and in tuned in your business? Like, give us some insights into some of your best practices.
Yeah, getting up at 5 a.m. and I think I did like 20 minutes of yoga and 50 push-ups this morning. So that was my little starting, like, hey, let's get the blood pumping. Let's just get a little grounding to start with, right? And then just basically, set the intention for the day. What do you want to what do you want to accomplish today?
Sure.
Set intention. And then, I review my goals. I do some journaling. Just really like this is my quiet time. I just kind of focus on everything. And then I'll either do some writing, if I'm writing a blog or a post, or if I'm reading something inspirational, and just really spend, an hour or 2 hours in the morning just getting all that stuff going. And then I'll, go into to start the day with the daily activities, but just set the intention for the day is really what I think is most important. Gary Keller talks about the one thing or whatever, but what is your intention? What do you want to achieve today that's going to move you forward further towards your goals? Right?
That's awesome. Thank you for your wonderful advice, Jens. Tell our listeners how they can get in touch with you and where they can locate you.
Yeah, so my email is Jens, Jens, at opendoors with an S capital.com. So opendoorscapital.com. And if any of your listeners want to get on a free strategy call, talk about investing or coaching, anything, they can go to opendoorscapital.com/call, and they can schedule a free call there. I'd love to talk to anybody, regardless of what questions they may have.
Awesome. It's been a pleasure, Jens. I appreciate your advice. And as you move forward, I will look forward to hearing some more progress and having you on a future episode. I appreciate your time today.
Thank you, SK038. It's been a lot of fun.
Thank you.
So much.
Thanks for listening to Premium Cashflow Real Estate Investing Podcast. Please join us at premiumcashflow.com to sign up for weekly updates, research articles, and more. We will see you again for another great interview with an expert guest.